Welcome to Get Serious. We're at Serious Land Capital. We have funded over $6 million worth of vacant land deals with industry leading 41% operating margins. So today I wanted to go over a case study of a recent deal that we've been underwriting that has some very attractive aspects to it, but there's certain levels of complexity that really needed to be dove further into before we would consider pulling the trigger on it. And I think serves as an example of just, again, how creative you may need to be, as well as just how deep you need to dive in before any asset or before pulling the trigger on any particular asset. I was just on Jesse Kwong's Land Investing Secrets podcast. I'm sure that'll be out again soon. And that was kind of a common through line that I was mentioning during the pod, is that in addition to going up market, focusing on larger value deals, is that, especially in a market like this where there's just inherently more competition, it's harder to find the deals with true margin available for them, that you often have to, utilize some elbow grease and dig through some issues that you might not have ever seen before, or not within the particular pattern that specific deal has, even if you've done hundreds, looked at hundreds, maybe thousands of deals here. So again, and especially when you operate nationally like we do, you have to pay even closer attention, just because some small deal details can completely blow apart the underlying deal. It's rare to be able to find those deals that are just like a clear purchase note, strings attached to them, or possible hair, and then sell for a quick double, and have a clean dispo process. They are still out there, and we've been fortunate to have some even within our portfolio over the past year. But I think the vast majority have been more complex. So with this one in mind, what was with a team that we've worked together with before, and it was actually a sub 50K purchase. So that's already a rule that we were considering breaking. Like generally anything below 50K, like it's just, even if the deal is a possible 2x exit or roundabout, just given the opportunity cost and resources needed from our team to go after them, it's not worth our time. And so this deal was for 40K specifically. But a key caveat here is that it was actively being rezoned into a light industrial property with an anticipated conservative exit value between like roughly 175K to 260-ish K, according to very experienced commercial and industrial realtor who's been in that market for 30 years. And even reviewing the commercial properties myself in the comps available in the area, usually I get turned away pretty quickly there. But buying at 40K, like there was virtually no chance that we'd lose money, but virtually no chance that we wouldn't sell for at least a 2x, assuming we were able to complete that rezone. And so with that level of margin in a deal, or at least potential, it's slightly below what our typical minimum might be, but because of the possible, again, margin for it, it could be a longer hold, a little bit more of a unique asset. In industrial and commercial deals oftentimes are, and they'll play by different rules than resi or recreational lots. We were willing to consider it. So just FYI, from that perspective, you gotta follow your own rules that you do set for yourself. But any true connoisseur, virtuoso, like understands there are some times that you might be able to break them. I mean, like some of this becomes like so obvious, right? Like if you had, somebody brought us a deal for, hypothetical example that was a purchase for $10 and the conservative value was $1 million, like anybody would do that, right? Like those deals don't exist. But it just goes to show, like, that there's a line for everything, and we drew the line at 50K for anticipating average like 2x margins on deals. But that's not always going to be the possible spreads that we can go after. But relevant to this one, why it was so interesting as well too, is that this whole rezone process is happening without having to take title in the first place. I mean, plenty of times, if you're trying to rezone a property, you might already have to get title, and then you're at incurring that risk of the rezone, and maybe not understanding the process or the timeline. You can't market the property for the value it's worth. But this seller was motivated enough to run through that process to get this property rezoned prior to selling it for a slight bump in the initial negotiated purchase price, which to me is just easily worth it because then you just de-risk the property significantly. Critical for this area, which is the biggest remaining flag that we had, is that the realtor had indicated, hey, unclear whether this property has access to city utilities, and it hasn't been annexed as far as we're aware into the actual city itself. And oftentimes, especially for sewer availability, there has to be some type of annexation for properties. This is common around much of the country prior to getting access to those particular utilities. So it was a rezone plus annexation process. And our understanding was that the annexation was required in order to get the rezone anyway. And the realtor was estimating that it might not have water running to it nor sewer. And she was initially estimating it could be 50-ish K roughly to extend those lines to the actual property. And so just discount 50K for an anticipated buyer who can take care of it on the back end. So even that, if we assume an exit between 175, 260 minus 50K, still makes a ton of sense as far as a potential deal. However, always have to double check these assumptions, right? So, we always work with the operators who bring us the deals, but I'll always want to speak personally with the realtor. If they're going to be our main, point of contact and the main person running Dispo, they're effectively a consultant, almost an employee, a temporary employee within our company. So I really, really want to make sure that we're aligned and understanding the most critical details. And in this case, the utility piece was the major one. That was the possible biggest wrench, especially when sewer is involved, can totally throw off different deals. So when I was talking with this particular realtor, it was still unclear. It didn't seem that there were online utility maps, and so we'd have to call and get estimates from some local plumbing contractors effectively to see back a napkin what it might take to extend. But when I was running the math on the aerial map on from what the realtor was estimating where the sewer line was to drag it 500 feet, 550 feet to just the border of the property. And then she was referencing hey, that's going to be $220 a foot. And I'm like, wait, $2.20 a foot or $220? And it was the latter. All of a sudden, to extend over 500 feet, if that was the case, it was still unclear to us where the sewer line actually was in relation to the property line. You're looking at a $120,000 extension. That completely blows up the potential exit of the deal here. And this property really only made sense from a commercial play, just where it was located. The current zoning for resi just was not attractive, and the realtor was adamant you're not going to be able to get a solid return from a residential perspective. It only makes sense really from industrial here. Pretty much all of her buyer pool is going to require sewer plus water access, and oftentimes that's going to be related to regulations that for various building permits and so forth, what the city requires for that end usage. Is that the case for all of them? No. She did have this particular buyer that just wanted to do kind of a truck parking lot, which would not require a sewer going toward it. He was more of a bargain buyer, so we'd offer a lower price, but it would probably still be enough for us. However, the caveat is that he didn't want to pay to pave the lot that he was going to use as a truck parking lot. He just wanted to do gravel. And the issue is that if the city annexed the property, they were going to require a paved lot, which was going to add too much cost to the particular buyer. And so that opens up another can of worms here. It's okay, we have a possible buyer who's very interested in this deal, not totally set on it. He's sniffing around other ones. So, nothing in writing. Are we willing to take a discount on the deal if, that eliminates the chance of having to, figure out this utility extension process. That's probably not going to work out unless we really get lucky and the lines are closer than what we expect. But it's also would you consider this a catch-22 where the only way to get this thing zoned for the parking lot that he needs is forces an annexation into the city? So then now we're kind of going back and seeing, okay, what would the cost be to just pave this lot? I think it's like 4 acres roughly. I'm not sure what that cost might be, and seeing if we could potentially get enough margin, get this guy under contract, and almost turn it into a transactional deal. So we could just turn around and move it upon the rezone and closing on the particular deal. But if this guy bails on it, that could really, that would be high risk, because now all of a sudden you did all this work for the particular property for, again, a pretty limited buyer pool that the vast majority of other industrial buyers really would want the full utility access. So all of that's to say, and one other point too here is that, again, which pays to have local experts, is that if there were already utility lines, sewer and water and so forth, that had already passed the property line, you always have to check, again, in certain jurisdictions, whether there might be any recapture fees. And to me, that kind of, it makes sense. It's a bit fair, because like if somebody is much further down the street and they basically pay to extend the utility lines for themselves, but it also serves anyone else who builds along that street and might be closer, that if somebody develops on a closer lot, they would effectively pay the owner of that improved property that had initially installed the utilities. And so who knows what those recapture fees might be, but that's something also to check in on that we wanted to confirm there. So there was a lot of stuff going on behind the scenes, trying to figure out, again, who the contractors are that could get us, quotes, and, leveraging the brokers, local experts. Hey, do you have people that you've worked with before that can do fair quotes, timely manner, etc.? Like, again, if you're operating nationally in different geographies, you really, really got to find the right folks to answer the questions that you have, as well as come up with additional questions that you hadn't thought of prior, to avoid getting stuck in kind of nasty situations when, the highlights of this deal are like, yeah, $40K purchase, rezone while the seller still owns it, and then exit for almost $200,000. But as you see, not that simple, and unclear whether we'll be able to figure this one out. But hopefully this one helps. Subscribe and share, everybody. SeriousLand.capital for any of your funding needs. Again, 50K plus almost all the time. And talk to you later. Bye.